In terms of stablecoins, we have many options for USD stablecoins. Seems like every year there's more coming out. But what about Euro stablecoins for all those people out there on my channel that aren't necessarily within the US? And there's really not that many options out there that are legitimate enough for institutional investors and liquid enough for traders. But this is where EurXB comes into play. They're a relatively new player in the game that has created a decentralized Euro stablecoin architected specifically with institutional investors in mind. But we can use it too, of course, and that's what's pretty cool about this. They already have 100 million worth of these tokens issued, making them the largest Euro stablecoin provider. But they're not actually backed by euros. They're backed by various financial assets and are over-collateralized. I know this is a lot of details that we'll touch upon in a bit. Now, the last noticeable difference is that your EurXB gives you interest just by holding it. You get 7% annual yield automatically if you hold it in your Ethereum wallet. No staking is required. If you put yourself in the shoes of European investors who face zero or negative interest rates, you can see why such a product is really enticing. So in this sponsored video, I'm going to break down for you EurXB, how it utilizes both DeFi NFTs and how you can use it as well. If any of this sounds interesting to you at all, or you're looking for some more assets to include in your portfolio, then you're in the right place. Otherwise, guys, let's jump into today's episode. So let's take a step back in terms of stablecoins. We've got three types out there. First, we have stable coins that are backed by fiat currency like USDC, TUSD, or even USDT. Although Tether is a whole other can of worms I'll leave for another video, these are usually the most liquid and trade the closest to its underlying asset. So second, we have our decentralized stablecoins, which are backed by cryptocurrency and maintained by smart contracts. They hold a decent peg to their fiat value and are especially useful in the DeFi space. Third, we have our stablecoins backed by other types of assets like Pax Gold, which is a gold-backed stablecoin because real-world assets represent that there is a proof of concept and a proof of assets process, which is critical, and they are also less stable in terms of dollar or fiat value because the underlying asset fluctuates. So EurXB is in the third camp since these tokens are backed by bonds and not by euros directly in fancy finance terms. That means it's debt-based because their issuer of the bonds owes whoever holds them. The bonds are handled by a highly regulated process, which is all verifiable on the blockchain, so investors can be confident and the assets are backed by the token. So another important point is that these stablecoins are over-collateralized to 133 of their value. This means that for every €1 of stablecoin, there's $1.33 or 1.33 euros worth of bonds backing it. So the reason for doing this is so that the euro value of the stablecoins can be easily covered by the bonds backing it, and even though they fluctuate in value, it's still okay. Now remember, bonds generate interest, and these bonds are no different in this case. 100% of the interest is paid out by token holders, so you can get 7% annual interest directly to your crypto wallet if you hold their token. Now if we take a step back, this is quite innovative. What they've made here, EurXB, is an interest-bearing token secured by bonds in a fully transparent manner. We definitely haven't seen this before in the DeFi space. Just a word of caution though, because this is a new and experimental approach, and you definitely want to do your due diligence and understand the potential risks involved, since there really isn't a traditional stablecoin that's backed by simple euro deposits. Now, how does this actually work through behind the scenes in every step of the process, from auditing the underlying bonds to certifying and creating the tokens and making sure that smart contracts are working properly? There are some professional and legitimate firms involved to make sure everything is well documented and enforceable for the token holders. After all, this thorough process is what the traditional finance system demands and requires in terms of the actual process to create each EurXB token. It takes 4 steps, and there's a lot of different tokens involved. It's not as simple as saying, okay, you got the bonds, time to mint a EurXB token. The first step is actually to issue a registered bond, which is secured by assets like cash or other equivalents. The second step is to create an NFT token to represent those assets. This is called EurXB Security Assets Token. And the third step is to create another NFT called the EurXB Bond Token. It is directly tied to the bond and is now 133% collateralized by the token. All of these bond tokens contain info like registration, number of rating agreements, and proof of issuance. So agents around the world can verify the info with full transparency. Lastly, the fourth step is the EBND is now a collateral for the protocol to issue the Euro stablecoins, or our EurXB ERC token, 20 tokens. For every 1 million EurXB token, it's backed by a single EBND token worth 1 million euros. And their unique approach of using NFTs make it easy to prove ownership and verify each step of the process. So now, what about the juicy interest I was mentioning earlier? Well, they have a unique approach for that too, because there's no fees required to pay out the interest. Every time you transact with your EurXB tokens, the interest is credited within the same transaction via smart contracts. Remember, this is really enticing for European investors who face negative interest rates. These tokens pretty much are backed by secured bonds, protecting and regulating and give you a steady positive interest. I mean, what more can you ask for? You can find this token on CoinGecko with the ticker symbol EurXB, and there are trading pairs already on Uniswap and Balancer with other stablecoins like USDT, USDC, DAI, and BUSD. So now your EurXB is an interest producing stablecoin, but they also have a governance token called XBE token, which holders can help with managing and governing the whole protocol and their treasury. What's interesting is that EurXB doesn't have investors, and this token is distributed fairly to liquidity providers. There was no premium or pre-allocation for their founders, so in total 15,000 XBE tokens were issued. 12,000 of those went to liquidity providers, and the 3,000 for the treasury to incentivize future improvements. There's actually some benefits of holding the XBE token too. You can earn a cut of the fees by staking it in their institutional vault. And institutional investors can also stake their EurXB tokens in the vault and earn up to, I believe, 5% APY generated, and the rest is paid out to the XBE stakers. This is 5% in addition to the 7% from the bond interest, so the total return could be up to 12%. So I know that was a lot, and let's take a step back again here with the interest-bearing bond-backed stablecoin and their governor's token. This is some serious innovation in the DeFi space. Plus, they're tapping into an undervalued Euro stablecoin market and doing pretty much everything in a way that's friendly to institutional investors. Once again, this is an extremely experimental approach, one that basically merges security tokens with a stable coin. And just note, you don't buy this for massive gains, but rather a steady cash flow for their, the APY. And XB, on the other hand, the sky's the limit, theoretically, in terms of how much it could be worth, but that does depend on the success and adoption of their protocol and their products. Let me know if you have any questions, though I know this was more advanced of a topic than I usually cover, so please, if you have any questions, feel free to ask them and do your own thorough research if you're thinking about getting into some of this, EurXB. Otherwise, guys, huge shout out again to EurXB for sponsoring today's episode. Make sure to subscribe, turn on post notifications, smash the like button as this does help support the YouTube algorithm. Also, make sure to follow me on Discord, and I'll see you guys in the next video.